Well, the problem is, as you know, for years it kept dropping interest rates, and now Powell's raising it. The real problem is the bond market's crashing. And the bond market is systemic, as you know. I mean, I'm concerned about IRAs, pension plans, and all that. So this is more than it's. I mean, I'm concerned, should I say?
Are you worried about the potential collapse of the economy and how it might affect your financial well being? Well, you're not alone. In fact, financial guru Robert Kiyosaki recently gave a warning about the potential collapse of the economy, and he has some unique insights on how you can still become a millionaire despite the challenges. Welcome back to our channel. In today's video, we are going to discuss Robert Kiyosaki's take on the state of the economy now. But before we start, check this clip from the interview with Kiyosaki on Fox Business.
Because this thing here is trash. They're going to print more and more of this fake money. And that's what the Fed and the FDIC is signaling. We're going to print as much of this as possible to keep the crash from accelerating. But they're the guys who are causing it.
The bond market and its impact on the U.S. economy. Now, let's talk about the bond market because it's kind of a big deal. In his recent interview, Robert Kiyosaki discusses his concerns about the bond market and its potential impact on the U.S. economy. He believes that the current state of the bond market could lead to some significant financial troubles. But what exactly is the bond market and why is it so important? Well, the bond market is where investors buy and sell debt securities, which are basically IOUs issued by governments, companies, and other organizations. These securities pay interest to the bondholders, and at the end of the bond's term, the issuer pays back the principal amount. So why is Kiyosaki worried about the bond market? Here's the thing. He's concerned because the bond market has a huge influence on interest rates, and if something goes wrong there, it could send shockwaves throughout the entire financial system. This could lead to higher borrowing costs for individuals and businesses and even trigger a recession. The world economy is not a market. Kiyosaki's got a pretty interesting perspective on this whole situation. He emphasizes that the world economy is not a market, and he advises against holding on to paper assets. Instead, he suggests investing in alternative assets like gold and silver, as well as real estate and other commodities. These assets have stood the test of time and have been proven to be reliable hedges against inflation and economic turmoil. But why is he so pessimistic about paper assets? The reason lies in the current global economic situation, characterized by high levels of debt, increasing inflation, and the potential for an economic collapse. According to Kiyosaki, these factors make traditional paper assets, such as stocks and bonds, less reliable and potentially less valuable in the long run. I mean, who wants to put their hard-earned cash into something that might not be worth much when the economy goes downhill, right? Gold and silver, for example, have been used as currency for centuries and have maintained their value over time. They are tangible assets that cannot be printed or manipulated by governments, making them a reliable store of value. Kiyosaki advises investing in physical gold and silver rather than paper assets like ETFs, which can be subject to market manipulation. Real estate is another asset that Kiyosaki recommends investing in. He argues that real estate provides a stable source of passive income through rent and can appreciate in value over time. Real estate also provides tax benefits and can serve as a hedge against inflation. Kiyosaki also suggests investing in commodities like oil, gas, and agriculture. These assets are essential to the functioning of our economy and have intrinsic value. They can also provide a reliable source of income through dividends and price appreciation. In addition to investing in alternative assets, Kiyosaki emphasizes the importance of financial education. He believes that the traditional education system does not adequately prepare us for the realities of the business world and that we need to seek our financial education on our own. Kiyosaki advocates for learning about investing, entrepreneurship, and financial literacy. He suggests reading books, attending seminars, and seeking out mentorship from successful investors and entrepreneurs. By understanding how money works and how to invest in alternative assets, we can potentially protect ourselves against economic turmoil and build significant wealth. However, Kiyosaki acknowledges that investing in alternative assets comes with risks. He advises investors to do their due diligence and research before investing in any asset class. He also suggests diversifying your portfolio across multiple asset classes to reduce risk and increase potential returns. The road to becoming a millionaire in a collapsing economy. Now that we've talked about the potential collapse and the risks associated with paper assets, let's focus on Kiyosaki's recommendations for becoming a millionaire during these tough times. Here are some key takeaways. Invest in gold and silver. Precious metals like gold and silver have historically been considered safe haven assets during times of economic turmoil. They tend to hold their value or even appreciate it when other investments are declining. So investing in gold and silver can be a smart move to protect your wealth. Fun fact, the price of gold has increased by more than 500% in the last 20 years. Real estate investments. Real estate investments can be another great way to build wealth during economic downturns. By carefully selecting properties and managing them efficiently, you can generate rental income and potentially benefit from long-term appreciation. Plus, with historically low interest rates, it's a great time to get into the real estate game. Did you know that investing in real estate has been one of the most consistent ways to generate wealth throughout history? Pretty cool, huh? Diversify your investments. It's essential to diversify your investment portfolio, especially during uncertain economic times. By spreading your investments across different asset classes, you can minimize risk and potentially maximize returns. Think of it like this. Don't put all your eggs in one basket, because if that basket drops, you're going to have a mess on your hands. Financial education. Knowledge is power, and understanding how money works and how to make it work for you is crucial. Invest time in learning about personal finance, investing, and wealth building strategies to increase your chances of success. You know what they say, the more you learn, the more you earn. Adapt and seize opportunities. The economic landscape is constantly changing, and those who can adapt and seize new opportunities are more likely to succeed. Keep an eye out for emerging trends and be prepared to pivot your investment strategy as needed. Remember, fortune favors the bold. Robert Kiyosaki's general view on inflation and how they can help you prepare for the future. Inflation is the rise in the prices of goods and services over time, which ultimately reduces the purchasing power of money. Robert Kiyosaki has been warning people about the dangers of inflation for years, and he believes that it is one of the biggest threats to our financial well-being. Kiyosaki's view on inflation is that it's not a natural occurrence, but a deliberate act by governments and central banks. According to Kiyosaki, governments and central banks purposely print more money, which leads to inflation. He says that this is done to pay off debts, stimulate the economy, and keep interest rates low. Kiyosaki argues that inflation is a hidden tax on our money. He believes that the more money the government prints, the more our money loses its value. This in turn reduces our purchasing power, making it more difficult for us to buy goods and services. Kiyosaki believes that the traditional ways of protecting ourselves against inflation, such as saving money or investing in stocks, may not work in the long run. He argues that saving money may not be effective since the value of money is constantly decreasing due to inflation. He also believes that investing in stocks may not be a reliable hedge against inflation because the stock market can be unpredictable. Instead, Kiyosaki suggests that we should invest in assets that appreciate in value during inflation. These assets include real estate, gold, and silver. He says that these assets are a reliable hedge against inflation since their value tends to increase during times of inflation. Kiyosaki also suggests that we should invest in our financial education. He believes that by understanding how money works, we can better protect ourselves against inflation. He says that financial education can help us identify investment opportunities that can help us build wealth and protect ourselves against inflation. In addition to investing in assets and financial education, Kiyosaki suggests that we should focus on creating multiple streams of income. He believes that relying on a single source of income can be risky during times of inflation. He suggests that we should explore different ways of earning money, such as starting a business or investing in real estate. Kiyosaki also advises us to be mindful of our expenses during times of inflation. He suggests that we should focus on reducing our expenses and avoiding unnecessary debt. By doing so, we can free up more money to invest in assets that appreciate in value during inflation. Embracing the challenges and building wealth. In addition to his warnings about inflation, Robert Kiyosaki is also known for his unique approach to wealth building. He advocates for a shift in mindset towards entrepreneurship and investing as a means of achieving financial freedom. He argues that traditional education systems do not prepare us adequately for the realities of the business world and that we need to take control of our own financial futures. Kiyosaki's best-selling book, Rich Dad, Poor Dad, is a testament to his belief in the power of entrepreneurship and investing. The book details his personal journey from having two dads, his biological father, who was an educated but financially struggling man, and his best friend's father, who was a self-made millionaire with a focus on entrepreneurship and investing. Through his own experiences, Kiyosaki learned that financial success comes not from traditional education and working for someone else, but from investing in assets that appreciate in value and generating passive income streams through entrepreneurship. He believes that anyone can achieve financial freedom if they are willing to learn and take risks. One of Kiyosaki's key pieces of advice for building wealth is to focus on alternative investments. He advocates for investing in assets that appreciate in value during times of economic uncertainty, such as gold, silver, and real estate. These investments can serve as a hedge against inflation and provide a stable source of income. Kiyosaki also emphasizes the importance of diversification. He believes that putting all your eggs in one basket is a risky strategy and that spreading your investment across multiple asset classes can help protect against market fluctuations. By diversifying your portfolio, you can potentially reduce risk and increase your chances of long-term success. Another essential aspect of Kiyosaki's wealth-building philosophy is financial education. He believes that traditional education systems do not adequately prepare us for the realities of the business world and that we need to seek out financial education on our own. This can involve reading books, attending seminars, and seeking out mentorship from successful entrepreneurs and investors. Kiyosaki also advocates for taking control of our financial future. He believes that starting a business can provide a source of income as well as an opportunity for personal growth and fulfillment. By taking control of our own financial destiny, you can potentially build significant wealth and achieve financial freedom. Of course, building wealth is not without its challenges. Kiyosaki acknowledges that taking risks and facing failures are a natural part of the process. However, he believes that these challenges are opportunities for growth and that the key to success is to keep learning, adapting, and moving forward. Remember, tough times don't last, but tough people do. So stay informed, make smart decisions, and keep working towards your financial goals. And don't forget to share this video with your friends and family to help them better understand Kiyosaki's warning and his recommendations for building wealth during economic turbulence. Thanks for tuning in. If you found this video insightful, be sure to give it a thumbs up, and if you haven't already, hit that subscribe button to stay updated with the latest financial insights and tips. Until next time, take care and keep hustling.